I am so excited to make this video for you today. I think the data that I have to show you is just so cool. And it's not just because I get to debunk a popular retail strategy. What I'm going to show you today really gets down to the fundamental nature of markets and trading. It's the most important thing that any beginning trader can know, and it's what this channel has always been about. And that's this: success in trading is not going to come to you through some guru, strategy, or indicator. Yeah, there's a lot of useful things for you to learn about trading in the markets, and there's a lot of advanced and empirically backed information on my channel that can help you out. Ultimately, though, success will have to come from you and the things that you discover. Markets are competitive, and you cannot build a long-term edge by following someone else. Now, today's example, Smart Money Concepts, is the perfect test case because it really has become quite popular on YouTube. There's an entire cottage industry of creators pushing the idea now, and I know I'm not the only one that is sick of the YouTube algorithm promoting this racket. And yeah, that means there's going to be plenty of haters out there upset about this video, but that doesn't matter, and I would implore my regular viewers to just ignore any such harassment that you see. All that matters is what the market actually does. If there is a tendency in markets that can make us money, we should be able to prove it using empirical data. And that is why today's video will be focused on the data and what the data can teach us about markets. There's all this other stuff I could go into about, like, the student loan fraud and people claiming that they got these strategies from God. There's just an endless history of drama and lies from that community, but I just don't think I need to get into that, and I'm not going to talk about individual people. There's going to be plenty of recommended videos over, is it this side? Maybe it's this side, but YouTube will suggest plenty of videos about that if you want to go down the drama rabbit hole. Just finish watching this video first, though, because that drama rabbit hole is a really deep hole. So let's go a little into the conspiracy theory behind Smart Money Concepts and what the setup actually is. So Smart Money Concepts claims that market makers are manipulative entities that are able to completely manipulate prices to screw you over. The claim is that the moves are all calculated ahead of time to fool retail traders, and if you understand their algorithm, you too can take advantage. This usually centers around something they call a liquidity grab. A market maker can push price through major support or resistance and use the resulting stop volume to position themselves the opposite way. So there's one setup based on this concept that has become particularly popular on YouTube called the silver bullet. Sounds like an obvious red flag to me, like you might as well call it snake oil at that point, but that's what they're calling it, the silver bullet. Now, the nice thing about the silver bullet is that it is a very well-defined setup. Usually gurus don't define their setups very well because otherwise their followers would just backtest it to find out that it doesn't work. But that's the thing. But that's the thing about the Smart Money Concepts community that irritated me enough to take the time to make this video. They think that backtesting is just going back through a chart by hand and judging what they would have done if they were trading it live. That's not backtesting, guys. That's just a waste of time. Humans are not objective or consistent enough to perform a valid scientific backtest. Calling that a backtest is so incredibly deceptive that I just can't let it stand. There's hindsight bias, confirmation bias, not to mention that you need multiple years and thousands of trades to get a statistically significant result that accounts for fat tails. So any backtest that can be performed by hand won't give you enough data points. Of course, I don't have that problem because I'm a programmer, and that means that I can run a backtest that is both objective and is over a large enough sample to give us usable empirical data. That's an important word, empirical. You'll notice I use it a lot. Empirical means that the result is based on observable data that others can verify. So the strategy that I wrote in NinjaTrader 8 will be available for download from my Discord and is linked in the video description. Everyone can download the code, read the code, run it themselves, and verify the results. That's important because I'm sure you're gonna see comments from people claiming that they ran their own backtests that were successful. If they don't provide the code for us to test ourselves, there's no way to verify the claims, and we should just assume that they're lying. Anyways, the silver bullet setup goes like this. The manipulators will push price across a key level such as a previous low as part of a liquidity grab. Price will then return to above the structure from before the push. I know this sounds like really weird terminology. That's because a lot of what these guys are doing is they're taking concepts that other people came up with and renaming things. In normal traders speak, what they're talking about is just the swing high from before the move down, as in like Dow theory. Now, on the pullback from that move, they're looking for a fair value gap. Again, don't think too hard about the name. It has nothing to do with value. They're just picking words that sound truthy. But a fair value gap is basically an area where price moved through that area fairly quickly. The idea is to buy when price returns back to that fair value gap. If the trade works, you'll see a higher low and price will reverse. Really, it's all just a complicated way of describing a higher low reversal. Of course, there's a few problems with the whole idea. If there is a pattern, wouldn't other market participants modify their behavior accordingly? There's also no discussion about the mechanics of how a manipulator could move price in such a way in the first place. It is true that a market participant can move price up through their buying, but that also means that their profit-taking selling will move price down. And as we discuss in my proven market behaviors video, that selling is likely to have a stronger impact because of the damaged liquidity behind the move, meaning the exit will move the market more than the entry did and result in a net loss, which doesn't mean it couldn't work, but it's a super risky trade. If the manipulator doesn't get enough volume out of the break, they'll be stuck with inventory that they'll later have to puke. Not to mention that the majority of the volume out there is not retail volume. There are other large players out there that could take advantage and screw the whole thing up. Now, at this point in the video, I was going to go more into detail about how I coded this in NinjaTrader, but let's be honest, you just want to see the results. You can view the source yourself, and I can make a follow-up video on the code if there is enough interest. Let's just go straight to the interesting part. How does it perform? And pardon me if I geek out a little bit too much here. This is really cool data and it backs up something that researchers have always suspected. So at first glance, one might think that the strategy appears to work. It has a terrible Sharpe ratio, but it did make a little bit of profit. But look at the profit graph over time. For most of the backtest period, the strategy just performs randomly, suggesting that there's just nothing to it. That is until a period around the pandemic where it starts working really well, followed by the most recent period where it gives up almost all of those gains. In other words, it worked for a while and then suddenly stopped working. But what's more interesting is that these changes in the performance coincide with the popularity of the trend on YouTube. Here is the Social Blade stats of a popular smart money concepts channel, and you can see that the very day that channel took off is almost to the month when the strategy started performing so badly. Now, this is just one instance, so I hope that researchers can kind of run with this and maybe track other strategies and their performance on YouTube, but this becomes a very interesting case study. Yes, I am saying that YouTube influencers are having an impact on market movements. This might seem a little far-fetched at first, but you have to remember that orders have a strong impact on price, and these channels have hundreds of thousands of subscribers. That can add up to millions of dollars that will easily move the market on a short-term basis and attract other traders to try and screw the strategy up. Again, note that the strategy performs randomly through most of the data set, that until the trend first kind of started on YouTube, which suggests that it was the popularity of the strategy itself that created the initial success. A strategy being a little bit popular helps the strategy. In the end, though, it's just the market plumping you up. Eventually, the strategy gets too big and it will start to fail. This is the whole problem with patterns and why all the data suggests that technical analysis, and yes, even the price action form of technical analysis, just isn't effective. Trading the strategy changes the performance of the strategy. If you size up too much or the strategy gets too popular, it turns into a losing trade. Now, I bet you that even after all of that, you're still going to see people out there claiming that the strategy is working for them. Well, keep in mind that people can make money in the short term by taking on a lot of risk. If your stop is much further away than your target, then the trade will end up a winner most of the time. You might even be able to pass a prop firm evaluation from doing that. However, any backtest with a large enough data sample will show you that there's no efficacy to those strategies. It just takes a little longer to find out that they didn't work. This is the number one trick that trading charlatans will use. They'll take on big risks so that it seems like they're winning all the time. And then when they eventually blow the account, they just kind of neglect to mention that to you. Now, it's natural at this point for some traders to feel a little lost about how to proceed from here. If patterns don't work, then how do you trade? Because all you've ever been taught is to look for chart patterns. My challenge to you is to try trading by just using what you know about the market. Nothing beats just being informed, guys. Yes, that requires a lot of constant research every day, but there is tons of opportunity out there. You see, the strong impact of orders leads to a very statistically efficient market, but it also leads to the market being very inefficient from an informational perspective. Those huge institutions that are executing big orders can move price very far away from what would be considered fundamental value. So there's all sorts of things you can know that just aren't properly reflected in current prices. Focusing on this informational asymmetry has made a big difference in my own trading, and I'll tell you what, it is a lot more fun than staring at a chart all day. I mean, it is possible for you to find a technical edge from staring at charts. It's just really hard to find things that haven't already been mined out. If you do find such an edge though, I would recommend that you keep it to yourself. And me, of course, you can tell me, I promise I won't share it with anyone else or trade it too big. Now, if you want some more information about the empirically backed order flow view of markets, I would recommend watching my order flow video series, particularly the last few videos about the proven behaviors of markets and the inelastic market hypothesis. Also remember that I stream my trading session every weekday morning starting at 8:30 Eastern time. It is still a small, tight group where we collaborate instead of just trying to follow a signal. And so you can come in and ask any question you want. I will see you then. In the meantime, stay excellent, team.